What's happening, everybody? It's your boy, Sean McLaughlin at Options Sean. This is the All-Star Options Jam session for Wednesday, April 24th, 2024. We usually do these on Thursdays. Have a little bit of a scheduling conflict this week. I'll be on an airplane this time tomorrow, which is when we usually do these. So we're knocking it out a day early. I hope that's okay with everybody. For those of you who are new here, what we do is this is a session where we review any action that has happened in open trades that we have on the books and all-star options, any trades that we've exited, either for a profit or for a loss, any trades we may have done an adjustment in, which we do have one trade adjustment that we did this week. We also update stops on positions that need their stops updated. And then, maybe we'll talk about some new trades we've put on this week. So again, trying some new stuff out this week, second week in a row. We're attempting some live charting for you guys. We'll see how it goes. We're having a little bit of a technical difficulty with that. Jason, if you're watching, hit me up in chat. You might be able to help me out. I'll tell you what it is in a second. But let's do this. Before I get into the charts, I have to drop the old disclaimer here that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. I hope you learn by nothing else than by osmosis, right? Is that the right phrase? All right, so let's get into it here. Let's bring up some charts. Let's look at the S&P 500. This is where we are at right now in the market. We've had a nice pullback. The largest pullback we've seen in the broader stock market in quite a while, since the fall, since September, right? I think it worked out. I haven't done the math, but I believe this was about somewhere in the neighborhood of a 5% correction. Is that terrible? Not necessarily. Well overdue, long overdue for sure. Have we stuck the landing? That's the question that's on everyone's mind. I don't know. Earlier this morning, I would have said, yeah, I think definitively we've stuck the landing, but I gotta say, I don't really like the trading action we've seen so far intraday. We got 4 hours till the closing bell, so a lot can change, but I gotta say right now, not too enthused with the follow through that we're seeing. I was really thinking that the bulls were going to turn the screws on the bears today, but we'll see. Anyway, let's also bring up the VIX real quick just to get a picture on that. Sorry, that's not the ticker we want. I'm still learning my way around this platform, everybody. Okay, VIX, there we go. We've had quite a pullback off of those highs. Now, this is, typical, right? When you have a spike in volatility, it tends to come down just as quickly. And we're seeing that. We peaked briefly above 21 in the VIX last week. Now that's a crater down to below, almost below 16 right now. So that's a big pullback, which tends to happen and makes me think that maybe the worst is over, but we'll see. We'll see what today does. But that's the big picture. Sorry, I keep hitting my mic here. Mic is also new. But now let's get into positions that we have had some action on this week. We'll start with the bad news. Let's just rip the Band-Aid off. We had some trades that we had to get out of during the pullback. We had to prune the garden, as they say. In no particular order here, let's start with Robinhood. This was a bull call spread that we got into back in late February. Jason, by the way, if you're watching, this is the thing I'm having trouble with. For some reason, I lost my crosshairs. I used to have crosshairs here, and I don't have the crosshairs anymore, and I don't know how to get them back. So if you could help me out with that, that'd be great. Anyway, so we got into this trade in late February. We bought the September 2030 call spread. We paid $1.35 for it, $1.35 debit. But hey, this isn't entirely bad news. When we closed below our stop loss level over here, I exited the trade and I got out for $1.37. So I paid $1.35 to get in, got out for $1.37. And all intents and purposes, that's a scratch, right? Once you factor in commissions, I didn't make or lose any money. But hey, getting stopped out of a trade and having it be a scratch, it's not the worst thing in the world. Now, I like the way it's held its 50-day moving average here, which, I may live to regret that exit. Time will tell, but hey, I have to stick to my process. And my stop loss level was 17. We closed below it right here. This big red candle you see right there. Had to get out. All right, so we're out of Robinhood. Next up is Dash. This was a trade we got into early March, I believe. We bought the long August 175 calls for 450. Well, we broke 130. That was my stop loss level right here. We closed below 130. So we got out of the trade and we got out of these calls for 275. Again, not a terrible loss. I know you've all heard this a million times from me, but for those of you who are new here, it bears repeating that when I put these trades on, when I put trades like this on and I pay 450 for the calls, I size my position in a way that if I lose 100% of that premium, which is a real possibility, okay? If I lose 100% of my premium, that 100% loss, in this case, a $450 loss per contract, would not represent more than 1 to 2% of my entire capital. Okay. I don't want to lose more than 2% of my account on any one trade. I rarely will risk more than 1%. 2% is my absolute max. Most of my trades tend to be a max risk of about 1%. You may have different numbers. That's fine, but that's how I size my trade. So when I pay 450 to get in and I get out for 275, hey, you know what? I was prepared to lose everything. I don't want to lose everything, but I'm mentally prepared for it. And in this case, losing, half of what essentially half of what I paid to get in, less than half of what I paid to get in. That's a good outcome. I'll take that. All right, so we're out of Dash. All right, next up, again, we're ripping the Band-Aid off, talking about the losers first. Nucor, terrible earnings reaction yesterday, as we know. Stock got crushed, gapped lower. We closed our June 230 calls that we paid $7 for back in early Feb. We got out for 485. Not a terrible outcome considering the stock just got crushed coming out of earnings. I'm not terribly upset about that, right? I mean, I don't like to lose, of course, but in my mind, I was kind of thought, oh man, we're gonna be lucky to get out of these things for $1. To get out for 485, that's pretty good. That speaks to the fact that we have a lot of time to expiration. These calls still had till January, so that helps. All right. Next up, this morning we got out of Reliance Steel. We zoom out a little bit here. There we go. We got out of Reliance Steel. We got into this trade back in late March, I believe, early March. If I had my crosshairs, I'd be able to tell you. We bought a September 350 400 call spread. We paid $11 for it. Well, stop below our updated stop loss level. We got out this morning, 725. Jason, I see you in the chat now. Maybe you missed me before. I seem to have lost my ability to do crosshairs here on these charts. I don't know what happened, but I kind of like having the crosshairs and I don't have it. So if you could tell me how to get that back, that would be great. Anyway, we're out of Reliance Steel. Got out this morning, 725. Again, not a total loss. I sized the position that I could suffer a total loss if I had to. Don't want to, but all good. Click on the cog icon next to your time frame drop-down menu. Yeah, there you go. It says show crosshair. It's right there. Maybe it's the wrong color. Let's try this. Nope, I'm still not getting it. I could click. Yeah. Sorry, folks. Technical difficulties. Again, we're trying something new here. Still not getting it. All right, so we're going to move on. So we're out of Reliance Steel. That's the end of the losing trades. So 4 trades we got out of for losses this week. No big deal. Nothing was huge. We could suffer those losses. No big deal. Now let's talk about a quick trade, a quick turnaround. Oh my goodness. Back on, I believe it was Friday. No, it was Monday, or excuse me, it was Wednesday last week. We shorted Berkshire Hathaway June 370 puts. We collected $3 for them. We did it right here. You can see here. 3 trading days later, literally 3 trading days later, we got out at half. We got out at our profit target. We wanted to buy them back for half of what we collected on day one. We collected $3. We got out for $1.50 just 2 days ago. So on Monday. So we got into this trade Wednesday last week. We got out Monday this week. 3 trading days really in total. Hit our profit target. Did I think it would happen that fast? No, of course not. But you know what? That speaks to the edge of when you're selling naked puts. And this is not a trade I do all the time. do it tactically when the conditions are right. And in this case, conditions were right. We had Berkshire Hathaway selling off 11 out of 13 trading days. So basically 11 straight days. That wasn't 11 straight days, but 11 out of the previous 13 trading days, Berkshire Hathaway had traded down. In and of itself, that's a pretty rare situation. Well, as that was happening, implied volatility in the puts was rising because fear comes into the marketplace when a stock is selling off, especially when it has a sell-off of 11 of 13 days, right? So the options, the implied volatility in Berkshire Hathaway puts were rising to the, near the highest levels of the year. So that gives us an edge. We could sell that because what happens is volatility tends to mean revert. And all we needed was a little bit of a bounce, a little bit of a stick the landing situation. And the premium of those puts would just get sucked out. And that's exactly what happened. So we didn't necessarily need Berkshire to go up for us to make money in this trade. But the fact that it did only helped. So we're out of Berkshire. That's the good news on that trade. And then finally, the last trade that we had, or last trade that we have on, we did an adjustment in. And this was all according to the plan that we laid out when we put this trade on earlier this month. We put on a call calendar spread in Freeport McMoran, ticker FCX. We entered a May-January 55 strike call calendar that we paid $365 for. What is that call calendar? What is that? That means I'm short the May 55 calls and long the January 55 calls. And this 365 debit that I paid on day one is the absolute most I could lose in this trade. Freeport could go to zero. The most I'm going to lose is this debit that I paid. Well, according to the plan as we laid out, if those May calls were still out of the money, which they are, they're 55 strike calls and stocks trading at 47 right now. If those 55 calls in May lost their value, remember, we're short those calls. If they lost their value to the point where they were offered less than 25 cents at that point, then I wanted to roll them to the next month to earn a credit. Earning a credit reduces my net risk in the trade. So what I did is when the May calls a couple days ago, yesterday actually, when they were offered below 25 cents, I simultaneously closed the May calls and reestablished short calls in the next month, which in this case is June. The June 55 call strike, same strike, right? I reestablished in June, and the net credit on that roll was 45 cents. So to close the May 55 puts and to open the short June 55 puts, the net credit on that roll was 45 cents. And what does that do? Well, I paid 365 on day one. I just collected 45 on that roll. So now my net exposure in the trade is 320, right? 365 minus 45 cents equals 320. Now 320 is the most I could lose in this trade. And I'm going to continue rolling these short calls whenever they get down below 25 cents, as long as I'm still in the trade. I'll continue rolling them forward to collect additional credit and reduce my risk. The caveat being, if we get north of 52, which is up in this level here, if at the time those calls are below 25 cents, but the stock is above 52 bucks, I'm not going to roll anymore. I'm just going to let those expire worthless and ride the rest of the trade with my long January 55 calls and participate on potentially some unlimited upside. Meanwhile, at any point, if I have a calendar on, meaning I still have the short option on, if this thing rallies and screams higher up to 55 bucks and I still have the short calls on, I'm going to close the entire spread at that point. It'll be a profit. I don't know how much of a profit it'll be, but I don't want the stock to get too far above 55 while I'm still holding the short calls, because then I'll be on the backside of the P&L curve, and I'll potentially make less and less money, potentially lose money if it goes way above 55. Anyway, I threw a lot at you. The important thing here for now is that we rolled the May 55 calls into June for a 45-cent net credit. Okay. That's all the portfolio action, all the action in open trades we had this week. Let's toggle my other list here. Let's go to the recently closed, let's go to the updated stops positions, because now we're going to go through all the stops that we're updating. So let's, in no particular order, we'll just start with C Limited. We're in a June risk reversal trade where we shorted the June 35 puts and used those proceeds to buy the 65 calls. We did that trade back in late Feb, I believe, and we put the trade on for a 50-cent net credit. Well, the trade is working well for us. Those June puts are not worth very much. I mean, in fact, I could even close them now for a very small debit, and maybe I should. But more importantly, our stop loss level, I'm raising the stop loss level now up to 53. It says 52.99 there, but it's 53 basically, which corresponds essentially with this support that we saw a few weeks ago and approximately the 55-day moving average. So 53 is the new stop and C limited, but you'll see this line right up here at 50 or 65, excuse me. At 65, I'm going to take some profits in this trade. If we get to 65, I'm not going to close the whole trade down, but I'm going to sell half of my calls for whatever I get for them. And that will lock in some profits. And then I'll still have a little piece to continue riding into June, come what may. I mean, this thing could scream higher. We'll see. But the stop now in SE is at 53. Okay, next up, Valero, ticker VLO. We are long some September 175 calls that we paid $4.54 back in early March. We've already sold a third of our position here during this last run up. We've had a significant pullback, which is a bummer, but it seems to hopefully, knock on wood, found a little support here recently, and I'm updating my stop to now be just below that recent support. So at 161 is the stop in VLO. All right. And the good news here in VLO is if our stop gets triggered there at 161, whatever we sell the remaining position for, that's pure profit because we've already locked in profits when I sold a third of my position, back in early April. Already locked in guaranteed profits. So whatever I get for the remainder of my September 175 calls, that's pure profit. So I'm in a good situation here in VLO. So happy about that. But new stop right now, 161. All right, moving on. Last week, we talked about a short-term trade in Wells Fargo that we got stopped out of just before this rip, which I was pretty salty about. The good news, the consolation is that we're still in our January 60 calls we got into back in January of this year. We sold a third of that position this week, which is nice. So we got guaranteed profits locked in there. That happened when Wells Fargo broke through, was it 60? Maybe it was 59. I forget off the top of my head. But anyway, we sold a third of our position. I am updating my stop now to, this is hard to read, but it is 56, I believe is the level. 56.50, excuse me. 56.50 is our new stop loss level in Wells Fargo. Okay, here's a quick one, guys. This RIOT trade. Me and Straza did our weekly jam session, or sorry, our weekly flow show on Monday, where we do a live video where we walk through our how we come up with trades, and we come up with trades live on the air. It's a fully, it's an unscripted show. It's fully improvised. Straza throws ideas at me, and I tell him yes or no if I like them or not, and then we kind of figure out an options trade to put on them. That's what we do with the flow show every Monday at 11:30 Eastern, I believe is the time we do that. This Monday, we put a trade on in RIOT. Me and Straz were talking about it, and we loved the fact that when the stock was trading right around $10 at the time, the May 11 strike calls, which were just $1 out of the money, were trading for less than $1. And we really felt like this stock had a real potential to move, a real catch-up potential to kind of rejoin the tight correlation that it has with the price of Bitcoin. RIOT is a Bitcoin miner, for those of you who don't know. And historically, I mean, historical is a relative word in the world of cryptocurrency, right? But historically, RIOT has traded with a very tight correlation to Bitcoin, to the price of Bitcoin. If Bitcoin is rising, RIOT is rising. Well, that correlation decoupled a bit over the last 3 months, and me and Straza, in our infinite wisdom, the theory we had was that was due to the fact of the halvening that was coming up in Bitcoin, that Bitcoin miners are now earning half of the reward that they used to earn for mining each new Bitcoin block. Well, the halvening has happened. It's old news now. Buy the rumor, sell the news. You've heard that, right? Well, the thing happened, and now it's out of the way, and now we don't have to worry about another Bitcoin halvening for another 4 years. our thesis, me and Straza, was that Riot is probably going to reconnect with Bitcoin and resume that historical tight correlation that they have. And if that's the case, with Bitcoin hanging, you know, it's pulled back a little bit off its highs, but still hanging pretty high right now, building some nice support at higher levels. We think that Riot has the potential to really catch up to Bitcoin. And so some of you, it may sound outlandish, but when we got into this trade, when the stock was trading around $10, we thought that, hey, there's a real good chance this thing could scream to 18 before May expiration, which is a month from now. So anyway, we got into these calls. We paid $1 for them, a little less than $1. And boy, stock just screamed. I mean, almost immediately after we got in. And that rarely happens, guys. I know for those of you who are subscribers to All Star Options, when we put trades on, you typically have a few days to put that trade on. You might get better prices than we got. Things don't move that fast because we're putting trades on that have, 3 months expiration, 6 months expiration. There's no hurry. There's rarely a hurry. In this case, boy, if you didn't get in as soon as we were talking about it, you missed an opportunity to get in at great prices. So I'm sorry if you are on late on that. But anyway, we're in Riot. Our new stop now is at 950. If this thing rolls all the way back over and fills in this gap from earlier this week, this was a Monday's candle. If we fill that gap or get into that gap, then I want out. The clock is ticking, right? These are May calls. We're in the May 11 calls, so I don't have the words up here. The May 11 calls, and theta will be our enemy if this thing rolls over. So we'll be getting out at 950. I also have a stop loss just on the value of the calls too, by the way. Like I said, put the trade out at $1 for the calls. If they lose half their value, if they're offered at 50 cents or less, I will also pull the plug on that trade and get out just to protect what's left of my capital. All right, finally, the last stop to update is Google, ticker GOOGL. This is a bullish risk reversal, so I don't have the trade on here. I'll have it up next time. But we are moving our stop now up to 147 is the new stop in Google, which corresponds with the 50-day moving average. So Google 147 is the new stop. I like the way this thing traded during the recent market pullback. And now if the market has stuck the landing and if we're going to start going higher again, I really like Google's chances here. We're in a protected risk reversal. We sold a put spread, use those proceeds to buy an upside call spread. I like where we're at. All right, guys. User request, by the way, I listen to you guys. I take suggestions. And we had a great suggestion from a member at All-Star Charts community, or All-Star Options community. He said, hey, at the end of the jam session, can you maybe do a little slide that reviews the updated stops? Make it easy for everybody? Here you go. Look at this. I got a slide. Updated stops. Here are the 5 updated stops. We just reviewed them all. But if you want to, pause this video for a second and write these down, if that helps your process, go ahead. SE to 53, VLO to 161, Google to 147, Riot to 950, and Wells Fargo to 5650. Those are your updated stops in our open positions for this week. All right, folks, that's all I got for you. If you have any questions at all, shoot me an email, info@allstarcharts.com. If you're an ASO member, hit me up in the online, in our chat room, in our Telegram chat room. It's free to all of you who are members. If you are not a member of All Star Options and you want to get detailed trade plans of every trade that we put on, hit me up, man. Shoot me an email, info@allstarcharts.com. We'll get you hooked up. Also follow me on Twitter. Options Sean is my Twitter handle. All right. Tomorrow, I'm jumping on an airplane, taking my family to the Redwoods National Park in Northern California. Going to do a little hiking. So I'm going to be out of pocket. Although the nice thing is that we'll be in California. Market opens at 6:30 local time when I'm out there. So I'll be able to adjust some trades in the morning. So I will be around. If you have questions, I will be able to answer them. I'm not completely out of the pocket. So I will be poking in for the first hour each day. But there will be no videos for the next couple of days. All right, folks, have a great rest of your week. And I will talk to you again next week. Take care, everybody.